Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So COVID-19 has caused massive destruction across the globe, and there will be a time where we will get through this. We need to rebuild the global economy along with trust and confidence in the financial system. Now, I guess, hard to swallow because our financial system has been so weak and so misleading, and I guess there's backed off of nothing that holds real value, and that's why we do invest in the gold and silver, right? So this is going to be going over everything that COVID-19 has caused, but also the aftermath and its ramifications for gold. So the introduction is this. So the spread of the coronavirus has wreaked misery and havoc across the globe. National governments everywhere are implementing various containment measures to halt the spread of the deadly disease. No one disputes the need to put health before wealth, as trillions of dollars are released to fund medical services, unemployment payments, support businesses, etc. This is a black swan event in that no one predicted a form of flu would be so devastating. The longevity of this virus varies from a matter of weeks up to 3 years, and it's becoming apparent that some borders will remain closed for many months to come. The restrictions that have been placed on the movement of labor, goods, and services will have a negative impact on the global economy. There will come a time when we are through this and we will need to rebuild the global economy along with trust and confidence in the financial system. Today we will try to ascertain what the business environment will look like and what role gold will play in tomorrow's brave new world. Very interesting stuff. So before we start, make sure to smash the like button, people. Make sure you subscribe. Let's see if this video can get 100 likes. We can definitely do that. Everyone go smash the like button right now. So anyways, there is no doubt in my mind that the coronavirus was the ignition and not the cause of this rout of the stock markets. The cause was debt, government debt, personal debt, mortgage debt, credit debt, or credit card debt, etc. Debt. We have experienced one of the longest expansion periods in history, and we are due a major correction. The markets did try to correct from time to time, only to have monetary policy come running up to its aid with lower interest rates and quantitative easing. These policies were applied at a time when unemployment was at its lowest and inflation hardly registered. Questions needed to be asked and heads needed to roll. These actions will add trillions to the already bloated debt levels, right? We're trying to get ourselves out of debt by replacing with more debt. It's like trying to pay off a credit card with another credit card. It's just not going to work. So the interest required to service these debts will become a large part of their outgoings, if not the largest. We will meet this requirement with higher taxes across the board and unimaginable austerity. The talk will be of shovel-ready projects trying to go ahead, a line that we have heard before, yet the roads, bridges, and airports are still second-rate at best. Fiat currencies are dependent on confidence, which will be difficult to achieve in an environment where stock markets have been savaged and the bond market charges up for privilege. That feeling of being well off will be replaced with one of irritation and desperation for many of us. The notion that we could print our way into prosperity will be recognized as one of the most idiotic ideas ever dreamed up by humankind. I love that. Let me repeat that. The notion that we could print our way to prosperity will be recognized as one of the most idiotic ideas ever dreamed up by humankind. That is something to put on your gravestone, people. A friend of mine commented that trillions wiped off the stock market is only air money. It came from thin air and is returning to thin air. One of the wonders if the age of air money is over, I like that, the age of air money, is over, and that the next phase will have something like more solid form of money. Gold and silver. Money tied to hard assets is not a new idea, but there would be something to back up a piece of paper, a mixture of land, oil, precious metals, a form of index which could be measured, quantified, right? Cannot be destroyed nor destructed, cannot be created nor destroyed, which is precious metals. How this would work, I don't know. But the same old policies are not going to be cut if the confidence is to be restored in our financial system. So let's talk about gold. Gold has been a store of wealth for 5,000 years or so, has stood the test of time. and if considered to play a part in the new monetary reset, could bring some badly needed stability to those currencies that adopt it. It would also provide discipline, and that cannot be printed. So if you haven't got it, you cannot spend it. Politicians would no longer be elected on promises of free goodies. They would have to earn fiscal prudence and behave accordingly. Our day-to-day lives would be basic in a lack of a lot of frills that are taken for granted these days. A cake without icing, is that so bad? A quick look at the chart below shows that gold has been making steady progress and is weathering the storm with most asset classes. So, conclusion. Actually, I'm going to read over these charts. So a quick look at the chart shows that gold has been making steady progress and is weathering the storm before better. So, despite volatility, and gold continues to hold very well and is higher than it was at the start of the year, which is actually good. So even though, there's a lot of volatility in gold and silver, silver's more volatile than gold, you can see right here that it still is holding its ground. It still is going upwards. It's still going upwards. It's hard to look at that. Just like with Bitcoin, people say, well, Bitcoin's crash is down to $10,000. Well, actually, Bitcoin was $1,800 a couple of years ago. So if you think about it, $1,800 to $10,000, that's a very, very good gain. It's just you get desensitized to higher price levels. So it's easier to look at, $2,000 gold and say, oh, gold's down to only $1,500, instead of looking at $1,000 gold and saying gold's up to $1,500. Glass half full or glass half empty type thing. The technical indicators are changing that by the day, such are the extreme moves in the marketplace, a lot of volume. So here's the conclusion. We are drowning in a sea of debt, and yet the debasement of money continues at an ever-quickening pace. Fiat currencies all reach their true intrinsic value of zero given enough time, and that time has arrived. So that it's COVID-19 exposed the dollar's true value, which is nothing. If you hold a $20 bill in your left hand and hold a 1-ounce silver coin in your right hand, you can easily tell which is real value. If you put $50,000 in your bank account and then invest another $50,000 in gold and silver, in 30 years from now, that $50,000 in your bank account will have dwindled, and what you can buy with it will be basically nothing. But the $50,000 in gold and silver not only will have held its value, but the chance of those coins appreciating over time most likely will double, quadruple, triple, quadruple, and then you can actually live off that. See, gold and silver is a store against, it's a hedge against inflation. It's a store of your wealth. It's like preserving your money in a time capsule, especially as times get worse. So, an alternative solution is required, and gold could play a part in the new financial system reset. Now is the time to sell. Now is not the time to sell gold. It should be held with being acquired if you have funds allocated for investment purposes. Go gently, and I like that because a lot of people might be panic selling right now. And right now, the best thing to do is to hold off, right? You need to hold off and keep a keen and watchful eye over the market. Keep a pulse on the market. If you're going to be buying, selling, or trading, you want to make sure you're doing it accordingly. And I always say buy in increments, sell in increments. You don't want to go all in on anything. That's a prime way to get bit in the butt extremely hard. Because what if you sell at $18, but then within a couple months, silver goes to $20. You sold yourself short. Your lack of patience destroyed a lot of profits there. Or what if you sold at $18 and then silver goes to $20? Or what if you buy at $19 and then silver goes down to $17? You could have saved yourself a lot of money. You need to be careful with that. It's so easy to just click buy on AppMex just to buy, but it's not so easy to sell. So, anyways, just to recap a little bit, COVID-19 is causing a lot of damage, and it's hitting the U.S. really hard. People are running around like a chicken with their heads cut off. But right now is prime time to be investing properly, wisely, because we never know how much worse things are going to get. It said it could blow over in a couple weeks, a couple months, or it could be several years. We don't know yet. So anyways, I'm going to wrap this video up here. If you did enjoy this video, make sure to smash the like button. Make sure you subscribe if you're new, because I do post daily videos. Thanks for, oh, by the way, the link to this article from Seeking Alpha will be in the description. So anyways, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.